Hey, the opening bell is just a few minutes away. Let's check on some trending tickers on the Yahoo Finance platform. Add another one to the list of layoffs. Newell Brands has announced a restructuring and savings initiative called Project Phoenix that is expected to result in 13% of office positions being cut. The company will begin the process of reducing headcount in Q1. It will continue throughout the year. When fully implemented, Newell expects to realize annualized pre-tax savings in the range of $220 to $250 million. And this one seems to be focused on consolidating international operations. I think just running a more lean and efficient operation has been a focus of CEO Ravi Sagram, who we've talked to a lot in recent years since he joined the company. So I can't say I'm surprised by this initiative. And also it comes in the context of a lot of these retailers ending the holiday season too high on inventory, notably in the home furnishings category. And I'll put Newell Brands products under home furnishings.
Well, for some of the other simplification that they're talking about within this restructuring plan, it sounds like they're going to go from 5 operating segments now down to 3 operating segments, and consolidation is really going to take place between this commercial solutions, home appliances, home solutions segment as well there. And so perhaps within that, trying to make sure that it at least looks a little bit more for lack of a better word, has more well-roundedness perhaps in that segment itself, as they kind of redefine exactly where they're going to allocate some of the other headcount based on the people that are being retained as part of this too.
So it's not just tech.
Yeah.
We should make that clear, right? When we talk about all these layoffs that are happening, a lot of it's happening in tech. The preponderance is happening in tech. But we're going to see other companies as we head into a rockier period, as they batten down the hatches or prepare for what's coming, they're going to do this also. I'm just looking at the sales numbers for Newell. It's had 2 consecutive quarters of declining sales, and analysts are predicting that it's going to have 2 more, at least, of declining sales. So it makes sense then also that it is making this kind of a move in that backdrop there. So, preparing for the worst after what's already been not great. I mean, and the stock is down something like 36% over the past year.
If you're looking for a good tell on the economy, it's not necessarily these tech layoffs. It's a company like Newell that sells affordable bowls at a Target. They sell baby strollers. They sell pens at Staples. And all these products, the prices on these everyday products have gone up significantly, not just for Newell, really across the board for consumer products. And this might be consumers just cutting back for whatever reason. They cannot go out and buy that stroller. They're sticking with the pens they have. So to me, this is a big red flag on the economy more broadly.
The pens last too long. They're just too good.